To tumble, Microsoft's Satya Nadella says that the next 2 years will be challenging after the pandemic-fueled growth. Speaking exclusively to CNBC-TV18 Shireen Bhan, Nadella said that he remains cautious in the short term but bullish in the long term. The Microsoft CEO expects pockets of growth to emerge even if economies go through a recession. Nadella called India an exception amidst a challenging global environment.
Inflation, recession fears across most parts of the world at this point in time. Interest rates continue to move higher. Is it all flashing red on your dashboard? Is there any sign of green at all?
I mean, it's clearly many challenges right now around the world. In fact, India is probably the exception. There are parts, India, Middle East, Latin America, some of the other parts of Asia are the things that are green. And I think Europe and the United States are going to be challenged. I mean, the United States, not yet, but I think 23 will be much harder. So yes, we want to be very cautious in our outlook in the immediate term. Long term, I'm very bullish of us coming out, right? Because there are two cycles, I think, Shireen, that are happening. One is a supply cycle that's a very long cycle. That's a secular shift. We're not going back to 2010, 2011. Because of the geopolitics as well as essentially the rejiggering of supply chains, I think we're going to have a supply cycle that's going to persist. The demand cycle is going to be a classic demand cycle. There will be some economies that will go through a recession. Some may be deep, some may be minor. And then inside of that, there will be pockets of growth like India. And so I think for us as a global company, we're not going to be immune from what's happening in the macro. We will have to also get our own sort of operational focus on making sure our expenses are in line with our revenue growth, manage the short term, but make sure we're investing for the long term.
Many CEOs are now talking about having to respond to the new economic reality. What is that going to mean, not just for Microsoft, but for the tech sector in general? Are we likely to see more pain, especially when it comes to retrenching, downsizing, margins going to be under pressure, guidance going to be a downside risk to that as well?
I think overall, quite frankly, whether it's for us as Microsoft or the tech sector, it's going to be very important to look inside and say, are we as efficient as we need to be competitive? I mean, at the end of the day, just because we're a technology company doesn't mean that we are the most efficient at what we do. And so as the paradigm has changed, as the bar has risen, we have to measure ourselves with the new bar. So definitely and also the growth picture has changed, we have to have operating expenses that need to be aligned. So definitely we are going to look at all of that, and it means that we're not sort of immune, as I said, to the global changes. But the one interesting thing to your point, though, is tech industry employment is not tech employment.
Yeah.
That, I think, is the key divergence that needs to be well understood, because that, I think, is positive, by the way, for the tech industry long term. Because if you look at it, overall tech jobs is actually increased. The tech jobs now are coming in financial services, in energy companies, in retail, manufacturing, and that's healthy because in the long run, all those employees in all those industries are going to consume more tech infrastructure, right? When we think about our cloud business, long term we're bullish because of the fact that there's more employment outside of the tech industry of technical talent. And so that's, I think, what we are banking on.
No, I think you underscore the labor market resilience aspect. But, what we've seen, especially as far as the stock markets are concerned, and I know that CEOs often say that don't focus on what the markets are telling you, but they seem to be suggesting that there is significant pain in store for the tech sector. How do you read what's happening with the way that the markets have corrected, specifically the tech stocks, and what that signals?
For me, look, I'm never the one who would ever say ignore the market, because the markets are smarter than us all. I think they are reflecting on is, look, where is the growth coming from? And how should we think about normalizing for that growth? And so I think stock performance, economic performance are not exactly the same. But the key for us as a tech industry, I always go back as a percentage of GDP. The simple question to ask is, do we think tech spend will increase or decrease? If we believe software and digital infrastructure is going to be important in construction, in energy, in manufacturing, long term, then you have to be long on tech industry. But will we have to go through our own cycles around productivity? Absolutely, like anybody else. But that's at least my perspective. I wouldn't look, the only reason why I would say ignore the short term is because in the long run, we would be fine with demand. But in the short run, what we have to focus on is our own productivity and making sure we are at the efficient
How would you quantify short term and long run?
I would say the next 2 years are probably going to be the most challenging because after all, we did have a lot of acceleration during the pandemic, and there is some amount of normalization of that demand. And on top of it, there is a real recession in large parts of the world. And so the combination of pull forward and recession means we will have to adjust. And that will cycle through the demand cycle and, in fact, come out of it with what can be another massive growth cycle for the tech industry.